Welcome to the daily update, where I'll go over the action in the market for Thursday, January 23rd, and we'll see how things look for Friday, January 24th. Kind of a sleepy day, not seeing an awful lot of intraday price action, not any real moves to the upside or downside, but we did see an upward bias in the session and a nice little push right as the market was closing, and that set a new all-time closing high for the S&P 500. So we're still looking positive. We're overextended in some areas. One thing that I noticed right before I started recording, Japan, the Bank of Japan increased interest rates 0.5%. The futures in the US are not really reacting. The Japanese market is pretty much unchanged. That was the trigger, not the Bank of Japan so much, but the carry trade, they call that. That's what started the tidal wave over the summer that led to that big down day, and then we bounced up out of that. We'll see if there's any kind of an impact from that. But things are still looking positive, but we're seeing some signs that show that, okay, this sideways action is not really surprising because that's what we tend to see, but we're just waiting to see is more selling going to actually come in. Right now, it's really not been doing that. Okay, so right at the open, we ended up opening lower, but we found support at S1, and that set the low for the day at 6,075. And we chopped higher. We got above the unchanged level. We got above the daily pivot at 6,088. And we got up to R1 at 6,099. You could pretty much say 6,100. Now, in Wednesday's session, that was the overhead resistance, and we just could not seem to get above that. So I was watching things saying, okay, are we going to top out here again? Is it going to be continued resistance? But we drifted both above and below 6,100. So we hung out at that level. What really carried us higher was that we got above R2 at 6112, and that set a new all-time closing high. So really, we didn't break that resistance until right at the close. We were up 0.53% on below average volume. Now that's a little bit of a concern there. Here we are setting an all-time high with the S&P and volume actually drops off. Okay, just keep that in the back of your mind. We are positive in the short, intermediate, and long term, still looking overextended to the upside. And interest rates are actually going back up right now. There's been a lot of talk. There was some action taken by the new administration. President Trump also addressed the World Economic Forum saying oil is going to go down, interest rates are going to go down, or kind of demanding that they go down. We'll see how all that works out. I have some comments later, but a lot of it is geopolitical that's focused on what's happening in the US right now with the new administration and all the massive changes that are taking place very quickly. And it's got a lot of people freaked out. It has a lot of people very happy. It's got a lot of people kind of confused as to, okay, what does all of this mean? And what are the ramifications of that? Some comments, they did raise rates 0.5% in Japan. Will this impact what they call the carry trade? Where for a long time you could get money for virtually nothing, sometimes even negative interest rates, borrow it, and then use that money to then get some higher yielding asset. Well, that's starting to shift. And when this was being done by so many people with so much money, unwinding these things can produce some kind of a panic effect like what we saw last summer. Is that going to happen this time? We don't really see much of a change. I'm not seeing it in the futures or in interest rates or much of anything right now. We'll see if it's more under control this time. Then the S&P did set a new closing all-time high above 6,100, even with the mega caps and semis lagging. They didn't have a really good day. They didn't have a terrible day either. They just lagged behind the rest of the market, which could be positive. It means that we're seeing more of the rest of the market coming in and participating in the upward move. Here's where he says that President Trump spoke to the World Economic Forum. He did it virtually, um, saying that he will press OPEC and Saudi Arabia to lower oil prices. and he expects that the NATO countries, they need to be spending 5% of their GDP, and that foreign companies producing products in the US could enjoy lower tax rates. If they don't produce in the US, they may have to have tariffs. He also is demanding lower interest rates. Now, to say he's demanding it, remember, he's a negotiator, he's a businessman, he's not your usual politician. So he's throwing out these wild things like, okay, let's call it the Gulf of America. Let's take on Canada as the 51st state. Let's go buy Greenland. Okay, that's part of how he negotiates. And it freaks everybody out because they take him literally. It's okay, he's trying to negotiate in a public way with this because he's developed buildings and real estate and so forth. But of course, people take what he says and thinks that, he's going off the deep end when really he's just setting up things that he feels are in America's favor to impact the country in a positive way. He can't really demand interest rates go down. The Fed is a separate and independent entity from the federal government. It's part of the federal government, but they're supposed to be independent and apolitical. Now, you can make a huge case on either side, Republican or Democrat, that the Fed has been political over the years. Okay, fine. That's how things tend to work out. But in theory, the Fed is supposed to be independent. We'll see if that ends up having some kind of an impact as well. Small caps were still below their 50-period simple moving averages there. We've not been able to get that, so we're seeing that as overhead resistance. And we're still under the 50-period simple moving average with the bank ETF. That's another resistance area that we've been watching. And we still have a pretty long list. In fact, it's getting a little longer with the short-term extreme positive readings that we're getting right now. The rate of change 5 that had been on the list, that dropped off because we recalculated that and it's actually coming down. But our usual indicators when we're going up or down for that matter, but in this case going up, they're on the list. The Stochc RSI, Williams Percent R, CCI 14, and the stochastics. Those are usually there when we're seeing some kind of a trended up move. And the force index is still extreme. We're starting to get a little extreme with our standard deviations chart. We're getting up into the +3 channel there. And we're still looking extreme with the S&P McClellan oscillator. We came back down a little bit with the NYSE McClellan oscillator. We're still far away from the 20-period moving average as measured by the boom indicator. And a new addition is the RSI 9. That's the short-term momentum oscillator, which, again, it's looking extreme, but could also suggest good upward momentum. In the intermediate term, for the third day now, we're seeing the CMB composite, the PMO studies, the Sean trend meter, and a new addition is the percent B. Some of this was by that big upward move that we saw right in the last 10 minutes that the market was open. And that really pushed us up to the closing all-time high and also took us a little more extreme positive here. We're closing just a little bit outside of the upper Bollinger Band. No change to the scenario yet. We'll see if things develop. It seems like so much is focused on what the new administration is doing that a lot of other things that are happening are kind of taking a back seat right now. The dollar was down and interest rates were up. Now we're still going up with interest rates. We never did get down to that 4.5% level, but we're up at 4.64% with the 10-year yield where we had been at 4.6%. Sentiment is improving, and we're rolling with this as it's looking better. We came in at 47 after Thursday, where we had been at 43 after Wednesday. Our trend, we're still not trending. We haven't seen enough of a move yet to kick the ADX. It's flattening out, but it's still below the moving average. But the green line's going up, and that's positive, but we are below 20. That's why we're in a non-trending environment. The bias is positive with the up day, and the last number of days together have our momentum being positive. All right, we had weekly initial claims stronger than expected. So more people were filing for unemployment, at least for the first time. They expected 219,000, 223,000 came in. Last week it was 217,000. And continuing claims are also going up from 1.899 million to 1.899 million from 1.853 million. And I have charts to show you right here. The jobless claims starting to go up, and it's starting to turn our 4-week average back up right now. The continuing claims also going up, but we're flattening out with the 4-week moving average. Plotting them all together, where the red line, those are initial claims, those are going up. Continuing claims are going up, where the latest reading from the unemployment rate is actually coming down. Okay, so the 4-week average and share buybacks. Haven't been seeing a lot of charts about that from Isabel Net lately. And a lot of this will be curtailed by earnings season because they have blackout periods where they can't really do buybacks during those times. And we saw a real drop off in that at the beginning of the year here, going into the latter part of 2024. And that's what's been pressuring the market. When companies are out there buying back their own stock, that's a real boost of confidence for that particular company, and then that can feed over into the whole market itself. Then equity performance looks in line with historical non-recessionary cutting cycles. I showed a version of this chart yesterday. The dark blue line, that's where we're at now, and we're sticking with the green line, which is the normal path that we usually take, meaning that the market is still anticipating that we will not go into a recession. And other charts that we look at, and I go over mainly in the weekend videos, we'll have an update of those when I do those videos. We are seeing a divergence here where the purple line is the S&P 500, the truck tonnage index, which usually tends to follow the S&P, it's been really underperforming. And we've been seeing that pretty much since the whole COVID lockdown. All of that's been taking place. I don't know, they delivering things by drone now or something instead, and they don't need all these big trucks that they had been needing in the past. And then equity sectors and regional ETF flows, seeing an awful lot of money here going into the different sectors in the US. And also, here's just a look on the different sectors. A lot of money going into financial in the US, and that's been a really good performing area. The same with technology. And a little bit further down, discretionary, which has been performing really well since last summer. You're seeing about the equal amount going in there. When you look at emerging markets, the over the last year or so, we're seeing a lot of money going in, but over the 3 months, we're actually seeing money coming out. When you take a lot of these things, there's the problems that we're seeing in China, and we're seeing real negative flows here throughout other countries, which are classified as emerging markets. And then the CAPE, and I'll go over this again in the weekend video when I do the intermarket analysis. We look at a historical basis, which is what this is over here on the left, and then see, is the market considered to be expensive, fairly priced, or inexpensive? It says the CAPE ratio has only been this high during the late 90s and 2021. This is just showing that we're overvalued right now, but we've been overvalued for quite some time. And then in both periods, in the fourth quarter, the U.S. growth was running above 4% and expected to remain there, but today it's only at 2.7. So this is kind of okay. Maybe we need to be a little concerned about this, that growth isn't really performing as well, or maybe we could take that as encouraging, saying that we're not overheated right now. Okay, then NASDAQ 100, the 200-day moving average. This is how many days has it been above the 200-day moving average. And right now, at the time this chart was taken, was 467 sessions, showing good longer-term positive trends in place there. And this is the Fed funds are still anticipating further cuts. They still think things are going to slow down enough to warrant the Fed coming back in. But the 2-year U.S. inflation swap percent, shown in percent, shows market expectations are above the target. And so we're seeing a little bit of a contradiction here. All right, and this chart's already out of date. This is put out by Bloomberg. It says the S&P is on the brink of a record high. Well, this was done before Thursday session, and we did set a record high. Then this is kind of interesting too. This also ties into earnings looking forward. This is the CAPE that I showed earlier. That's based on historical earnings reports that have come out. Forward, that's looking at projections and forecasts by analysts and what companies are expecting that they will make. And we're over this 20 level in the US, but India with S&P 500 earnings weights is even more. And then you can compare that to what the other forward-looking PE ratios are in other countries. All right, here's our intraday chart, and we're seeing an awful lot of kind of flattish action. Our pivot points are not all that far apart. Now, going back to last Friday, we saw a gap and then kind of drifted. And then Tuesday, a gap. And then we did see some upward movement there. And then on Wednesday, a gap higher, and we drifted. We opened lower. This was one of the first days in a week that we didn't see a gap. And we actually came down to S1, but then we just kind of trailed along here. We were able to get back above the unchanged level, got up to R1. That's about the 6,100 level, and didn't really test that until right at the end of the day. That's when we saw this really shoot up, and we actually got up above R2 right at the close. So most of the strength was seen right at the end of the day. And that's when you see this massive increase in volume. For the strategies that I teach and that I do, I focus on the close. I watch everything as it's happening during the day, but I do it as close to the close as possible. And a lot of folks are doing that because we see this massive increase in volume. All right, then we're flat to slightly down in the initial overnight session, but we just kind of clawed our way back. We were actually a little bit more negative in the overnight session and then came back and showed an improvement and then ended up closing at the high for the day. We're still looking good here. When we look at the intraday chart of large cap growth versus large cap value, the blue line is above the red line. Both advanced, both are looking pretty good right now, but we want the blue line above the red line. Saw a little bit of an improvement here. We've been more or less going sideways with the intraday growth to value ratio for the S&P. End of day growth was up, but up less than value. It was down for the mid caps, where value for the mid caps was up, and it was up, but up less for the small caps. So a little bit of a tick down here with our small cap growth to value ratio. We're watching the index here. The hard part that the small caps are running into right now, it's not plotted on here. I'll show you later. We have the 50-day moving average right up here, and small caps just can't seem to get above that. Mid cap growth is showing an improvement, and we're also not really breaking out. We came up here, but we've been chopping sideways for the last few sessions with the mid caps. Ticked down a little bit with our growth to value ratio for the S&P, but it's still looking pretty solid overall and in an uptrend as the S&P is making an all-time high. Came down a little bit with our growth to value ETF study here. We're still inside of the rainbow, but not really declining all that much. This is the stronger area. Discretionary is really outperforming staples, and this ratio continues to go up. Large cap growth did not set an all-time high, but still looking good above the 50-day moving average. And looking at the condition of the trend, we're still underneath the moving average and we're still under 20. So when this drops below the blue line, that means we're not trending right now. And when we're below the moving average, that means it's a weakening trend. Now, we're just coming off of crossing from negative over to positive here. So we still default to positive, but if this green line can stay above and the red line can continue to go down, we would turn back up with the ADX, get back above 20 and back above the moving average. And we're seeing that same thing here in the short term, flattening out with the ADX below the moving average, below 20, but the green line is on top. And we were below average with volume in Thursday's session. Sentiment, we're coming just a little bit above the moving average here with the ulcer index. That shows fears coming out of the market. We were flat to slightly lower with the VIX on a closing basis. Also, we're dropping under the moving averages here as fear has also been coming out of the market. And the VIX is right in between the moving averages with the bar chart and with the line chart here. The momentum of the VIX continues to be down, and that's positive for stocks. We're still getting a very high reading with the skew index. It's pegged up near the top here. There's a lot of folks that they're optimistic about stocks going up, but they're not buying the stocks. They're going in and buying a lot of call options. That's what we see right here. It says the equity put call ratio is actually going down here. And then we look at the skew index, which is the blue line, and that's really been going up. And the person who posted this, their interpretation of this is that they're not seeing a lot of fear. They're buying a lot of calls in anticipation that stock prices will go up. We'll have to see how all that works out. And we ticked up with this fear gauge here, and we came back up just a little bit. Actually, we declined a little bit with this other fear gauge. So a bit of a non-confirmation there. We did get the latest reading from individual investors where they had actually dropped negative. Well, we start going up and they magically turn more positive now. So they're not extreme at this point, but they are looking more optimistic about things. We went up with the daily chart of the equity put call ratio. We're going down with the 5-day chart. We're going up still with the 10-day chart. And volatility risk premium was virtually unchanged. We're still seeing risk quite low as measured by this. We're below the band. Advanced decline line not really showing an awful lot of strength. Remember the based on price, it was the last 10 minutes when we saw that nice upward thrust here. But we're still looking positive based on price and volume. This is improving, even though we're seeing a drop off in the new highs. We're continuing to go up with the 5-day and the 10-day chart. So internally, things are still looking pretty solid there. We went back up barely with the advanced decline ratios, both with the short term, that's the blue line, and the intermediate term, which is a red line. And so looking at this based on price, we're positive, and we're even a little more positive here based on volume. The first smart money indicator that we look at, this is still looking positive. The skewing or the boom indicator here has us getting kind of far away from the moving average. I wouldn't trust that so much because we got a lot further away before and had a lower reading with this indicator in the past. But this is still positive. We're also going up with the Chaikin money flow. This is smart money indicator number 2, which is positive. And after declining slightly after Wednesday, we're going back up with the Chaikin oscillator. So our 3 smart money indicators are now back comfortably positive. The Chaikin oscillator didn't turn negative since we did not drop below the moving average, but it did go down. Now it's starting to go back up. And our vortex is positive, the green line going up and the red line going down. Not much of a change here with the cumulative advanced decline line for the S&P based on price. Actually going up just a little bit here based on volume. This is one of the areas that we've been a little bit concerned about when we take the advancers and decliners and then do a 10-day simple moving average of that. We had started to come back down. Now we're starting to go back up. Now, this is positive in and of itself, but other times when we eventually top out with this, sometimes that might mean a slowdown. There were a couple of times on this chart when it meant an actual reversal. And this tends to happen a few days before we see that in price. So that's why we're watching this chart pretty closely. We're still improving with our 10-day average of the highs and lows for the S&P and showing an improvement with the NYSE advanced decline line, but still underperforming the S&P itself. We want this red line to get back up to the bar chart, even though they're on different scales. That means they're more in tandem with each other. And we are seeing an improvement here with the cumulative advanced decline line for the NYSE, just really showing some strength there. We declined just a little bit with the NYSE advanced decline line and this other NYSE advanced decline line. But with both of them, and they're calculated in a slightly different way, that's why I show 2 of them, we're above the moving average. And so that means that it's positive. And not much of a change when we look at common stock on the NYSE based on price and volume. And we are seeing some improvements here with the advanced decline line studies. We're still above the moving average with the common stock on the NYSE, turning up slightly with the S&P, up with the mid caps, and coming back up a little bit above the moving average with the small caps. This is still looking better too. The broad market of the 5-period moving average of the highs minus the lows, we're still above 0. This ticked back up. These are the stocks inside of the S&P 500. that are above their 20 period moving averages. We had become extreme with over 80%. Excuse me, over 80% of the stocks in the index. We dropped down back down a little bit. We ticked up just a little bit, where we're now at 77.6% of stocks, suggesting good momentum. But we get a little bit nervous if we go back above 80. And we're above 70 here, which is the good momentum part. It's just when we get above 80, we get a little bit concerned, or at least start watching things more closely. We're back above 50 with our 50 period moving average steady. We went up with the 100 period and we were flat with the 200 period moving average steady and setting a new all-time high here. Looking pretty good above this pivot point, which had been acting as some resistance. We're above the pivot point, the current pivot point, and that just shifts things over to looking more positive on this. These pivot points last for a month. On the bottom, we dropped to below average with volume. Ticking back up a little bit with the 20, 50, and 200 period moving averages on the S&P, but we're getting kind of far away from the 20 period moving average. We use this like an oscillator, and we're starting to get an extreme reading. We've been seeing that for the last couple of sessions. And then we have our usual indicators that are extreme positive when we're moving in one direction or the other. The Stochc RSI is still extreme, as is the Williams percent R, CCI 14 and 20. We're extreme in the short term with the stochastics. The intermediate short term, we're above the midpoint and going up, and still positive in the long short term stochastics. Still hitting the upper Keltner band here with the force index, so that means we're going up kind of fast right now. The condition of the short-term trend is improving. We're above the lines and the lines are going up. We're above the simple and exponential moving average, and the blue line is above the red line. That's showing that we're going up with some velocity right now. This is the +3 channel. We're just at the very lower part of the +3 channel, but we could be getting a little overextended. Now, there are times, if you go back like to last June, when we rode this wave for many days as the market was going up. So this doesn't necessarily mean we'll reverse. If we could get up and stay in this band and then continue to go up, that would just show that the market's even more positive. We're above zero and going up with the balance of power. It had been more neutral and was actually negative as the S&P was going up. It's picking up some more positive action now. We're still extreme with the CMB composite since we're above the black line. Still getting brown bars here with the go, no-go system. It hasn't switched over to full-blown positive, at least yet. We are looking good with the highest high value. We're above the blue line. The blue line's starting to go up, and the midpoint is turning up as well. TTM squeeze is positive, and we're moving kind of fast here, so our standard deviation chart, which measures speed, is really increasing right now. We're above zero. This was the last of the more intermediate term indicators that we look at to turn positive. It's not extreme right now, but we are showing an improvement. And the Arun, which had been negative, also switched over positive with the oscillator. And this tries to measure buyers in green versus sellers, which are red. We're seeing buyers coming in and sellers going out. That's why the oscillator has crossed over positive. Still getting an extreme reading with the McClellan oscillator for the S&P. We're above the 60 level. But when that's positive and above zero, the summation index based on price and volume, they're both continuing to go up. This is a primary indicator that's still positive. We're no longer extreme with the NYSE McClellan oscillator, but we're still positive since we're above zero. So we're going up with the summation index based on price and volume. So the broader market is continuing to be positive. Seeing a little bit of negativity here. We're actually coming down slightly with the Swenlin trading oscillator based on price, but it's still positive. And we're rolling over a bit based on volume. We just want to keep an eye on this. Sometimes this gives us an early warning. On a momentum basis, though, we are positive. The PMO is going up. We're going up based on price and volume. We're still extreme here with the PMOs that are rising. And we're still going up with the buy signals, and we're still going up with the PMOs that are above zero. We're positive with the Elder's Impulse system for the S&P. The parabolic SAR continues to be positive since the dots are underneath. We're above the midpoint and going up in the short term with the slope oscillator. The MACD is also above the midpoint, above its moving average, also positive. So our short-term oscillators are positive, intermediate term are positive, and we're turning positive now with both the tricks and the KST, the longer-term oscillators. Copy curve is also positive, and we're just underneath this kind of sickly looking green area here. If we go up into that, that's when we're extreme positive with the Sean trend meter. The money flow is above 50 and advancing. That's positive, as is the ultimate oscillator. We're above the moving average with on-balance volume. The Pring bottom fisher continues to generate a buy signal, which ended up being a pretty good one. This actually crossed over and gave the signal a couple of trading sessions before we started to go up. So, but sometimes we get erroneous signals with this chart as well. It's just this one ended up being a pretty good one. The one last November also ended up being a pretty good signal. That was the one after the election where we shot up, came back down. This crossed over, and then we had a nice little run up with the S&P after that. Just barely extreme here with the percent B indicator. We closed just a little bit above the upper Bollinger Band. And this tends to not last very long. And we'll have to see. Will the Bollinger Band go up? Will price go down? What will it take for this to adjust so that it's no longer extreme? And with the RSI, we're switching back and looking more positive here with the 14. That's intermediate term. We're above 50. We're starting to get extreme with the RSI 9, but this is also suggesting good shorter term momentum. The condition of the intermediate term trend measured by 50 periods also improving, and the lines are starting to turn back up. We're above all the plotted moving averages, and the longer we stay above this, the more these lines will continue to go up. The 20s will cross back above the 50s. And we're still looking good with the 100 and the 200 moving averages here. The bullish percent index continues to be above 50 and advancing, another primary indicator that is positive. We're above 50 with the NYSE bullish percent index. We actually declined a little bit, but still above 50 with the NASDAQ 100 BPI. Improving here, we're above the cloud here, the Ichimoku cloud. That's positive. We're starting to cross back above here where the blue line's going above the red line. That's turning this more positive where the green line continues to go up. The green line's more short term, and so that's positive. This is more intermediate term here. When we saw the blue line below the red line, that's negative. Now it's starting to cross back over positive. And the trend channel actually extended this out a little bit. We're hitting the upper end of this. Now that caused a little bit of a problem last December. We got a little bit above it, and I draw this line on here. It's not computer drawn, so I may be a little off with this. We did exceed this in 2021, and then we went into 2022. So I'm trying to pick up mainly this trend of higher highs here that we're seeing. And then we also have a parallel line going on here. We are positive on a trending basis with the Heiken Ashi. The Kegi chart is positive, the Renko chart is positive, and the three-line break is positive. Long term, we actually ticked down a little bit with the 150 and 200 period moving average studies, but the long-term trend is still comfortably positive. We're positive across the board with all the stock indexes that we follow on all the different time frames. We're negative across the board with bonds based on price. The dollar has been falling a bit here in the short term, but still positive in the intermediate and long term. All of the sectors ended up being positive. Now, it's kind of interesting. Healthcare did the best, and it's a defensive area, but it's just been getting hammered lately. But it performed the best with tech communication. These are growth areas. They were up, but they were up the least. Discretionary was up 0.6%. So, I mean, it had a pretty good day, but it wasn't a leader. And we started out by seeing things more negative with the NASDAQ going below 19.9. It went below 2,000. We had a BPI cross below 50, but then the S&P late in the day, it got above 6,100 and then set a new all-time high. And still seeing a bit of a disconnect, but a slight improvement here with the weighted versus equal weighted version of the S&P. If these are more on top of each other, that means the entire S&P is participating. It's still underperforming a little bit, even though it did improve a bit on Thursday. And I wanted to point this out. This is an alternative type of Dow theory, where traditional Dow theory uses the Dow and the transports. I also add utilities to that as well. Well, to be more modern, we swap out the Dow for the S&P, which is setting a new all-time high. And instead of using the transports, we use the NASDAQ, which has not set an all-time high yet. So they don't have to happen at exactly the same time, but within a shorter, relatively short period of time, we want the NASDAQ strength to come back and actually set a new all-time high as well. And this is a further breakdown of that. I usually show this over the weekend. The equal weight has not set an all-time high, nor has the equal weight version of the QQQs, which is the NASDAQ 100, that has not set an all-time high. It's the weighted version that's really helping create that new all-time high. The Dow had a good day. It was one of the stronger indexes for Thursday. It was up 0.92%, coming up above its 50-day moving average and also closing above this R1 pivot point. And we're positive with the diamonds when looking at the Elder's Impulse system. We were up but 0.22%. We're still above this R1 pivot point here. So this could be support. It was acting kind of as resistance, but we were able to get above that with the NASDAQ. So this is still looking pretty good, but not at an all-time high yet. The NASDAQ 100 also above this R1 pivot point, above its 50-day moving average, still looking positive there. Positive with the QQQs, with the Elder's Impulse system. Momentum for the NASDAQ 100 is positive. This is the 50-day moving average with the S&P 600 small cap index. We came right up to this level, and although we're holding above this pivot point, we've not been able to get back up to the 50-day moving average, let alone close above it. Seeing that same thing here with the Russell 2000 small caps. The 50-period moving average, we've just not been able to clear that. But we're positive with the Elder's Impulse system for the small caps. Mid caps also having a hard time getting above this R1 pivot point right now, but still above their 50-day moving average, and they've switched over to neutral after being positive with the Elder's Impulse system. Here's the 50-day moving average with the bank ETF. Banks have been doing well. Earnings have been solid, but we're not really seeing much of a breakout here with the bank ETF. But the financial sector, it's doing pretty good. It was up 0.51% and well above its 50-day moving average. And it's kind of hard. I think this set an all-time high on a closing basis here. And we're looking good here. We were up 0.52% with the total U.S. stock ETF. And it's hard to tell, but possibly setting an all-time high there. We're still going down with the staples to tech ratio. That's positive. That means tech is outperforming staples. Here's the financial sector, not at an all-time high right now, but still above its 50-day moving average. The FANG index closing in on an all-time high here, looking pretty solid that way. And we're still coming up here. If we continue to go up, I'll extend this trend line to see if that ends up offering overhead resistance. And robotics, this is doing really well these days. The robotics and AI ETF breaking up out of the rainbow, looking pretty solid there. And still coming up to this 250 period moving average, though. Excuse me, when we look at the ratio between the two sectors. Apple coming down and testing its 200-day moving average. It was actually down slightly. Amazon was up, setting a new all-time high. Google was down 0.2%. Microsoft was up 0.11%. You can see not big changes here. That's why there wasn't more of a push with the S&P. Nvidia was up 0.1%. Tesla was down 0.66%, still above its 50-day moving average. Meta was up over 2%, probably one of the better performing stocks in Thursday's session. Netflix was up 3.24%, another real good performer, not quite back to an all-time high though, at least on an intraday basis. And we look at the relationship between US stocks and world stocks, still getting stronger with our short-term correlation and improving with the longer-term correlation. The semis to tech ratio actually went down. So we want this to go up if this is really going to lead tech higher. And then tech could lead the NASDAQ 100, and the NASDAQ 100 could help the S&P. And on a positive side, though, we're still above these previous highs that semiconductors had just had a really hard time breaking out of. So even though we were down a little bit here, we're still above these previous levels. Oil is coming down, not really reacting all that favorably to the comments that President Trump made that he's going to really try to push for oil prices to go down. The dollar is coming down here, but still in a longer term uptrend. And we're going back up with the 10-year yield. We're coming down with the 10-year based on price. And we're still watching this home construction versus the 3 to 7 year bonds. We still haven't been able to come back up to the 250-day moving average. And showing a little bit above the moving average here with the Qs to S&P. We're actually below the moving average with discretionary to S&P, even though discretionary is doing quite well when you look at it compared to staples. It's underperforming a little bit when we compare it to the SPY. And seeing an improvement here with large cap growth versus large cap value. So we're coming back up right about at the moving average with the large caps. Where we're seeing an improvement is with the mid caps and the small caps. And this is going down, which is positive. This means staples, which is defensive, are underperforming the S&P. So what's our outlook for Friday? Still dealing with earnings season. We're still positive for right now, but the technicals are overbought. We're gonna, okay, I didn't update this. We'll catch that on the next slide here. And we'll just deal with any of the geopolitical things. We're watching to see if there's any reaction to the Bank of Japan raising rates. Of course, anything crazy that could happen. And then the continued focus on everything that's happening with all the executive orders and changes going on with the new administration. So we're going to get the global U.S. manufacturing and services, as well as existing home sales and consumer sentiment. And okay, for some reason I thought I updated this, but I guess I didn't. So these are what the previous readings were, and if there was a forecast for that. Seasonality. Okay, this should have been updated as well, but wasn't. I apologize for that. Something got switched up here, and this should be over here to the 24th now. So that didn't quite get updated either. This got updated. This is a new chart. It's put out by Stock Traders Almanac. Here, this just takes a bunch of different ways of measuring this, and the black line are all post-election years. Okay, and this is how we tend to do throughout January. Then when you have the fifth year of a presidency, which really is what's happening, because this is Trump's second term, even though they weren't consecutive, how January went there. Incumbent party wins. That's the green line. Well, the incumbent party did not win, and the incumbent party loses. That's the red line. And that tends to be more negative since there's a shift. And usually that means things are not going all that well. So the one that we're kind of focusing on right now would be the fifth year. And then you have the aggregate, which is taking everything together, which would be the blue line. And we're still dealing with the second half of January, which is, at least for right now, turning out to be quite positive, but there's still more of the month left to go. Small caps still can't get above that 50-day moving average and kind of underperforming what we historically see. And we're in the positive time now in January, according to Tom Bowley's research. So we're still going down with the 10-day, and I should have switched this one over. The 5 days actually, we're going up with we're going down with the 10-day, up with the 5 day. Okay. But what's a little nerving on this chart is that we don't really have anything here. And that's when I get a little bit nervous, when there's a lack of negative things. Where we have a lot of positive things here. Our smart money indicators are positive. The growth to value ratios, discretionary to staples, those are all looking pretty strong. The advanced decline lines, they had been declining, but they're showing some subtle improvement right now. We're still looking extreme with the with the S&P McClellan oscillator and NYSE. It's dropping down. It's no longer extreme, but the summation indexes are positive. We're positive on a momentum basis. The parabolic SAR is positive. The Swenlin trading oscillator is declining based on price and starting to turn over based on volume. They're still positive, but we'll be watching that to see if it's giving us a warning sign. The bullish percent indexes are still positive with the three indexes that we look at. The Vortex is positive. We're positive with our moving average studies. The ease of movement, the money flow, and the ultimate oscillator are all positive. The financial sector is positive, and the momentum for the NASDAQ 100 is positive. So our conclusion, we're positive. Where in the short term, we're still overbought. We're seeing a little bit of an improvement here, but there's more of the broad market that's participating. But we saw that decline on Wednesday with an increase in volume. That's why I kept this one the same. We are overbought in the short term, but that could also suggest short-term momentum. But since we're seeing additional indicators that are a little more, we pay attention to those a little bit more. That's causing a little bit of a concern. We're becoming more overbought in the intermediate term, and we are still positive in the long term. Thank you. I hope you have a really good day, and I will talk to you in the next video.